So the first thing I would like to say, just to bring to your attention more than anything else, is that everyone can make a £12,000 capital gains tax, capital gain, and not be taxed on it. So every individual can get that. So we'll talk through an example like that. So that's the CGT annual allowance. So £12,000 gain will not be taxed at all. Basic rate taxpayer, you'll notice that we've got two different levels now. The government have penalized property investors yet again. So basic rate taxpayers will have a 10% CGT tax for non-property items and 18% for property. And high rate taxpayers will have 20% for non-property stuff and then 28% on property stuff. So this is where I'm talking about the same couple here. So let's imagine that you've got John, John and Christy are now married. I met at a bar or something, and they got married, and they got this asset, and they're saying, well, we've got these gains. What do we do with it? Well, it could be that if we take either John has got the gain or Christy's got the gain, what do we do about it? Well, the answer is we can use a deed of trust. What is a deed of trust? Well, there's two documents you need to be aware of. The deed of trust basically says that this person owns the property, and we're going to move the allocation over to this side. Now, if we're going to do that, basically, it could be that the property is owned 50-50, and you're going to change the share ownership, or one person can have 100% of the property, and you're going to be moving a percentage of that property over to the other person, ideally the basic rate taxpayer, or indeed someone who's not paying tax at all, right? Now, just one important thing before we delve into the main subject here. If you're moving a property, you've got the property that's owned 50-50, you would have got a joint mortgage. So that's no problem at all. If, however, you have got a property that's owned by Christy and nothing to do with John, then Christy might want to move that property over to John, but her mortgage terms and conditions says you can't do that unless you transfer the mortgage entitlement and debt ownership over to John. Why is that an issue? SDLT. So the amount of mortgage that's going to be transferred over, let's say the mortgage £100,000 in her name, you would technically be moving £50,000 of that mortgage to John, and it's above the £40,000, and therefore 3% SDLT charge will ensue. So you want to be making sure that you speak to your mortgage broker before you do this to ensure that you don't have an SDLT charge. You want to say to the mortgage company, lender, I'm going to be doing this transfer of ownership, but I want the debt to stay with me, okay? That way, we have no movements of debt and therefore no SDLT charge, okay? Good. Okay, so back to the point. If you've got a deed of trust, you could have a deed of trust legal document and a Form 17. A deed of trust document allows you to move the property between one person and another from a legal perspective. So I bequeath my 50% share over to John. John now gets all the property income and indeed the capital gains. Why is that useful? We'll come on to that later on. Now, if you've got a property that is 50-50 owned, then you are going to have to also tell HMRC that the property is no longer joint owned. You're going to have an interest in the property, but not necessarily 50-50. So you're going to have to take the deed of trust, which is the legal document, which says it's 50-50 previously, and now it's going to be a different percentage. And you'll need a Form 17 over the top of that, which then both copies needs to be sent to HMRC within 60 days. 60 days, by the way. So that's one thing that you need to think about when creating a deed of trust. Now, do you need to do a Form 17 altogether? Well, not always. Remember, a deed of trust and Form 17 is only used when you've got a property that is 50-50 owned. But what if Christy over here has 100% of the property and she wants to transfer some over to John? Do you need a Form 17? The answer is no. No. You do not need a Form 17 if you're transferring the property ownership over from Christy to John. Now, this could be anyone, right? It doesn't need to be just Chris and John here. But it could be you own the property 100% in your name, and you're going to be transferring an element over to your spouse or civil partner. You don't need a Form 17. You do not need to tell HMRC in this regard. You just need the deed of trust, which is the legal document and is signed. That's the important bit. Okay, so now I've kind of covered off that in great detail, I've noticed. What can happen is that, let's imagine that Christy had the gain of £30,000. We know she had the CGT annual allowance. She's got taxable gain of 18,000. She had a tax bill of 5,040. Now, what we could do is say, well, Christy is going to give up her property ownership in full and give that over to John. Now, John, in this position, would then have the £30,000 gain, and he's got a tax bill of 3,240. Now, that's less than what Christy would have had to pay. That's brilliant. The people that the 18% or whatever it was on that survey who does get that tax advice may got this tax advice here, but it's not the right tax advice. And why is that? Well, what should have happened is that £30,000 gain, you should have worked out the percentage. We have spreadsheets on this kind of thing, whereby you say, well, okay, what's your income? What's the income of Christy, let's say? What's the income of John? What annual allowances do they have? Where can we push it to the high rate tax band? And we will calculate the specific by the 1% of the ownership of this property and who should own what. So in this regard, you'll notice that Christy will keep £12,000 of the gain, so enough of that percentage of the property, so 12/8/30. And she'll have annual allowances of £12,000, which means she'll have no tax at all to pay. John has less of the transfer of the 30,000, so it's 18,000 now, and has a CGT annual allowance of £12,000. I've just noticed I screwed up on my numbers there. That's £8,000, but nevertheless, the tax bill is just £1,080. So ignore the £18,000. That's a screw up on my part, but the £1,000 tax is indeed correct. So you are changing the tax position from 3,240. Well, the originally was 5,040 by Christy having the property in her name, down to 3,240 by transferring all over to John, and then it's lessened even further by being really specific about the amount of money that's the percentage of ownership of the property, and now we're down to £1,000. So £4,000. How much did that cost you? Well, £300 for a deed trust, maybe £200 for a tax advice, £500 in total. Not bad.